Alright everyone, here we are with another video with Invest for Tomorrow, and to all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video, and to stay tuned on in towards the end of the video because I have another ticker symbol to share with you guys that you definitely want to add to your watch list. We've talked about it over at the Patreon, but it's time sensitive, so I want you guys to be aware of it. Now, if you guys want to know live updates on what I'm watching, you can join us over at the Patreon. So here we are. Ocugen Inc., OCGN stock. OCGN stock is on its way down, right? OCGN has been falling. Ocugen Inc. has been hit a little bit here with some downward trend. Now, the overall market is feeling it, but Ocugen is falling, okay? On its personal level, just individual stock, it is falling, and it's getting closer because it's already broken through some support levels that are important, and it's getting closer to that low down here of $6. This is super important, but I got some great news for those that are holding long or believe in the company, okay? So let's go ahead and read this before we jump into our support and resistance in the 50-day moving average and technical analysis. And let's go ahead and see here what this article says about Ocugen stock, right? OCGN. So basically they say who Ocugen is, right? And how they already racked up a massive 1.7 billion market cap. Well, they're sitting at 1.3 right now, so it's falling a little bit. So one thing is that I found interesting is how they're saying, okay, well, you know, Covaxin is soon to be rolled out, and it's going to be $1 billion opportunity through the distribution of the vaccine for Ocugen here in the U.S. Now, they basically have to go ahead and seek an emergency use authorization for its vaccine with the U.S. Food and Drug Administration, so the FDA. That's the first step. And the two firms plan to sell 100 million doses of Covaxin in the U.S. starting in Q2 2021. That's just getting started, okay? This is really, really exciting for me personally as an investor. I've been watching this and I'm like, man, Covaxin's taking a little too long to get over here. Ocugen partnered up, everything. Come on, you got to come over here with some emergency use authorization or FDA approval to bring it over here and start distributing it. Like, even if it's not 100 million doses, just sell 100,000. Let us know that you're moving forward, right? And, you know, I was seeing things a little delayed. Like, Ocugen wasn't going to have the opportunity to bring Covaxin this soon. Q2 is actually sooner than I anticipated. I was thinking Q3, maybe the end of Q2. You know, somewhere around there, because these other companies, you know, Johnson & Johnson and Moderna, and, you know, we have Pfizer, they're dominating right now, and they're the top, you know, ones leading the way in the race. But Covaxin seems to be a little bit more interesting. Now, they're saying that it's 81% effective now. Before it was saying 65. I'm not sure if things changed or, you know, they went ahead and did another study. But that's a good news right there on the effectiveness. And they're also saying that Covaxin is a little bit more easier to handle when it comes to temperature and, you know, its stability, actually. I was about to say. I was going to say sustainability, but it's stability in the environment and stuff like that. And then it's also very safe. I think Covaxin has been actually applied to all ages or all age groups almost, for the most part, out in India by the company Bharat Biotech, you know, sending it out. So now that it's coming over, Q2, that is awesome. Awesome, awesome, awesome. And the fact that they plan on selling that many in just one quarter, imagine if they try to bring another 100 million in Q3. And then the other question is that I've always said is, okay, if Ocugen didn't obtain this opportunity this early on, which this kind of seems a little earlier than anticipated, they were going to get the market share of reoccurring booster shots or reoccurring, you know, vaccine boosters to keep on, you know, keeping yourself, how can you say it, immune in a way, or have some type of immunity response and keeping it active year over year. And that's where Covaxin and Ocugen were going to be able to, you know, incur such revenue. Wow, I skipped over such revenue, and I kind of went ahead and cut it so that you guys can focus in on what's important and not be all distracted by everything around. But basically, the cool thing here is that they were going to have that shot, but that was the best case scenario when I was seeing this taking a little too long. Now it's coming in Q2. If this happens, that's likely going to be a 1 billion given and the current pricing environment for them. So $1 billion that the biotech Ocugen can obtain from this. So awesome. No more diluting, hopefully, so that they can just use this money to reinvest it into profits in developing gene therapies, which is what they're focusing on when it comes to eye care. So it's going to give them a higher market cap, and there's going to be huge opportunity here where retail investors and institutional investors are going to jump in on this, right? So the closer it gets to $6 or even $5, the more interesting it's getting, because Q2 is right around the corner. But unfortunately, the market is going downwards, and we want to watch this. And the fact that the Motley Fool, that was actually a portion of an article that the Motley Fool just recently went ahead and published 2 or 3 days ago. And the fact that that's out there, that lets us know that Ocugen isn't just a pump and dump or just wasn't ridden upwards by retail investors and that's it. No, there's some substance here. There's some type of genuine substance and opportunity, which it looks like that Covaxin vaccine is going to start rolling out in America, in the US market, and that's going to be a big deal. That's what I was really looking for, and I think that's going to be the biggest catalyst coming moving forward. So stay tuned for that. So let's go ahead and jump into this. So what's our support level? Well, we would go down here to this point, and this is the second lowest part, 712. Okay, I want you guys to write that down, 712. We're currently sitting at 729, and that's the lowest point reached in the day. The next one is 712. If 712 gets broken through, you want to watch this carefully and see if the bulls are trying to reappear and bring it back up, or are the bears tearing this one down fairly fast. Now, our true resistance is up here at $8.08, but since it's such a broad stretch, I would use this point right here where you can see that the bears were actually pulling down and the bulls try to level off, and the bears came and pulled harder, and you can use this as a point of reference to know where the momentum is going, and that's 773. Okay, you want to write that down. That needs to be turned into a support so the bulls can pull upwards, but the support level is very important once it gets turned into that. But the true resistance level that needs to be broken through is 816, so that this can get back into bullish territory and start to gain leverage. But before getting there, obviously right here at this point, 773 needs to be broken through, turn into a support, and the bulls need to pull away from it in the upward direction, build momentum off of that to reach newer highs in new resistance levels. As always, guys, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned to the end because I have a ticker symbol you won't want to miss, and you definitely want to add it to your watch list. Alright everyone, here we are with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Stay tuned on in because we got a lot to cover, and let's talk about how this is speculative but also an opportunity. So the first thing is I have neo.com pulled up. Definitely go check out the website so you can see more about their product and the opportunity that lies with this company. So let's go ahead and see their chart, and their highest was almost $67 at some point, and their lows recently were 31, and we're sitting at 37. So I mentioned this one over at the Patreon earlier today, and I blocked out the other two stocks because it's only fair for the Patreons. So if you're interested in knowing live updates weekly, what stocks I'm watching, and throughout the week as opportunities like this one present themselves, you can join us and join me over at the Patreon to know more about it. But let's go ahead and read this. So speculative stocks, but some interesting ones to watch. The reason why I said speculative, because there's some tensions right now with Chinese and US relations, which we went through that last year. I went ahead and talked about, I don't know if you remember last year's tensions, quote unquote, but the delisting and the auditing and the 3 years till they're going ahead and get delisted or whatever it was the case be, it was hitting these stocks. Now they are speculative because these tensions, quote unquote, could actually hurt the stocks if these tensions get worse or more serious, it could hurt the stocks short term. When I say short term, the rest of the year, the next coming months, or the next 2 years until things kind of loosen up or get a little bit better. But if they're temporary pullbacks that last a few weeks or days, these are opportunities before us. So I went ahead and said it. NIO is called the Tesla of China, and NIO operates in China's premium electric vehicle market. Like, this is the top of the line when it comes to EVs in China. They have a following, which their business models is impressive. And what I mean by that, they have a following, they have a cult-like following, and they're doing a really good job with their business model of making people have to come back to them for a battery swap. That's like impressive, okay? They're the only ones mastering this and taking advantage of this in their sector. It is sitting close to $37 and has hit a high of $67. So let's go ahead and go over here to see the article, and I'm going to go ahead and kind of break it down. So there's like a $30 difference right now, right? And I'm going to break down those $30. Hypothetically speaking, I'm not a financial advisor, and I am not here to tell you guys to buy, sell, or hold any positions, but I am here to enlighten you guys and open your perspective to something you may have overlooked or not understood or seen before. So this article talks about every reason why NIO is volatile and it's stumbling again today. So let's look at the three main reasons. The first one, treasury yields. That's temporary. That's happening to the whole market. This is not just NIO. China-US relations. This could be temporary. This is what's making it very speculative right now. And the third thing is chip shortages. Okay? Chip shortages are not that big of a deal. This is temporary. This is going to get passed over. It's hurt the entire auto sector. So out of these three situations, two of them is happening universally in the market, and this one's universally in the entire auto sector. So chip shortages, we can get past. Treasury yields, we can get past. Now, for Chinese EV maker NIO, that's certainly not bullish for the company's American expansion plans. Add in broad delisting concerns and things are tense. This is all fear, right? Based off of this right here. So what is being said here? China and U.S. relations have taken a beating in recent days. U.S. and Chinese senior officials met for the first time last week under President Joe Biden, and conversations were less than friendly. Indeed, there's a lot of baggage here between the two countries. President Donald Trump's trade war and Biden's Buy America stance have made Chinese and U.S. trade headwinds. Once again, the talk of the town among EV investors. Okay, so when this is going on, this lets you know that you want to focus on U.S. EV, right? And something that a lot of investors didn't have was like a Tesla competitor within the U.S. market. Now, CCIV has came into the picture. Whether CCIV is good enough or not good enough, I think a lot of investors are going to feel more comfortable with the Buy America stance, right, than focusing on Chinese. That's why Chinese is speculative right now. But if I was to break down the $30 that we're losing here, and all of this was to hopefully recover and one or the other would damage it, this is temporary for sure. This is temporary for sure. And these two right here account for $20 that we've probably lost here. So this can jump back up to 57. Okay. Now what's going to hurt it the most to get back up to those highs, and this is hypothetically speaking, I just want you guys to open your perspective on how much this has been pulled down by a temporary setback. So there's about $20 right now that are missing by a temporary setback. Now this is the most important $10, and these $10 could actually cost the stock the whole entire $30 or even more, or worst case scenario, delisting concerns. And this is where the fear comes in, and you need to rationalize as an investor what's really going on. So this had the issue with the delisting, and they talked about it last year. It's going to take 3 years before they're audited or they have to prove themselves and so forth. Now, could these get delisted right away? I'm not sure if they can do an executive order or something like that, but there's tension. But you want to remember, last year's tensions were temporary. This year's tensions, if they're temporary, this is opportunity. If they last, then you need to rethink everything and watch it closely. That's what I'm saying. You want to add this to your watch list now. I don't want you guys to miss out on it. It's time sensitive. And the sooner you know, the more aware you are. But the whole issue is that a lot of investors, they love NEO. And NEO's way ahead right now than CCIV, to be honest. But a lot of investors might choose CCIV over NEO in the coming months and probably years. And that could be the next mini Tesla. Could be. But that doesn't take away that NEO has potential. Just NEO needs to go ahead, which is China, not NEO, situate all of this to not get into the delisting concerns and hopefully get the company to expand in America. But the longer it takes, the more market share it's losing to Lucid and to Tesla. And that's where NEO might just do well in China, and it's going to have a cap, right? It's not going to be able to go much higher because it's only doing so much within Europe and just Asian countries and not reaching out here. For investors to get even more bullish, they need to see it everywhere. Right? Think about it. That's how you need to watch this, but you need to start watching it now. Be prepared like a hawk to strike for your opportunity. As always, guys, thank you guys so much for watching. I look forward to seeing your guys' thoughts, and let's make some money.